How's it going, everybody? It's Stas here. So it's an overall red day in the stock market today. The S&P and the NASDAQ 100 went down 0.5%. The Dow went down 0.4%. And the Russell went down 0.6%. So today, we're going to break down some charts, my thoughts on the markets, stocks I'm looking at right now. So sit back, relax, go down below, get your $50 from M1 Finance. All you have to do is use my link, deposit $100, and we each get $50 to invest with. And you guys could check out my Patreon if you want all my real-time moves, buys, sells, call-outs, and a bunch of exclusive content all on Patreon, and all of those are linked right down below. So let's get right into it, guys. And today, like I said, it was a red day all across the board. Silver, gold, Dow, S&P, NASDAQ, Russell, everything was red. But as you all can see, some stocks on my watch list here on the left were green, and we will talk about that later in the video, so make sure you guys stick through here. But first and foremost, like we do every single video, we're going to break down some quick technicals on SPY, which tracks the S&P 500, and there's really not much to say here. We're currently trading on the hourly chart, that is, above the 4-hour SMA, the 180 SMA, right? We're also trading above, and we closed above the all-time high from the middle of July, which is a good sign, but we're trading under the 50 SMA, and I would consider this the past 1, 2, 3, 4, 5, 6 trading days. I honestly consider this consolidation. You know, we've been choppy above the old all-time high from the middle of July, and the good thing is we've held above it. That's a very good sign that we're finding a new foundation, a new level of support before we end up climbing higher. That is what I'm seeing here, at least on the hourly chart, but we just have to break out of the upper end of the range, which is at about 441 to about 442. And again, we held 438 today, and we closed almost at 439. Not quite yet. We're not quite there. So for next week, I want to see if we end up pushing higher here on SPY. Do we end up taking out the highs from yesterday, the all-time highs at about 441.8? You might as well call it 442, the upper end of this range, consolidation range. And from there, do we break out? I think that's definitely possible, considering, again, you can see it better on the 4-hour chart here. We've gotten a good 5-6 trading days of consolidation in this level here. So I think there could be more upside, but we're not seeing it quite yet. And that is where you're going to see, or you're going to need, patience. Guys, patience is so key in the stock market, and it's not every day that we see huge pumps to the upside or massive red days. There's going to be a lot of days out there where we just straight up consolidate, and that's kind of what we've been seeing the past couple of days. So that's a quick analysis on SPY there. Just wait for the direction. Next week we'll probably get it. And when it comes to QQQ, which tracks the NASDAQ 100, this closed under a very, very critical level of resistance today at 365, which was the all-time high in the middle of July. And you guys can see clearly on the 4-hour chart, we closed under there. And if I zoom in a bit on the 20-day chart, you can see it as well. So for next week, I want to see if we end up breaking out of 365. Do we end up filling the gap to about 369, which is where we were back a couple of days ago on the 26th, 23rd of July? You know, I think that could happen, but we have to break 365 first. So I'm going to put my alert at that point right now, $365 per share. There we go. From there, maybe it does make about a 1.5% move up to that 369 level. And who knows, maybe we break out of there and see another leg up on QQQ before it ends up consolidating a bit and maybe pulling back again, because that is what we notice. You know, we see big legs up, it gets overbought, it consolidates, it sells off, moves a little bit sideways, then it starts pushing up again for the most part. That is what we noticed has been happening over the past couple of months. It's just the ins and outs of the stock market. Technically speaking, that is how things move. So nothing too crazy today, guys. We saw again a red day overall, and those are some key technical spots that I'm looking at when it comes to SPY and QQQ. So let me know your thoughts down below in the comments as always. And if you all are enjoying the video thus far, and if you haven't done so already, smash that like button for me, and let's get right into some stocks now that I'm looking at. Number one is Cisco, ticker symbol CSCO. This is one that did pretty well today, up 0.5%. I mean, it's nothing crazy. It's not a grand slam day or anything like that, but it was a green day nonetheless, and we closed right under a key level of resistance. And by the way, we are at a high point here on the 4-hour chart. If we pull back to the 3-year chart, which we'll talk about in a second, we're still about a couple of bucks away from the 3-year high, but we'll talk about that in a second, like I said, so stay patient, guys. But on the 4-hour, we're right at a big resistance at about 55.50. We struggled there for the past couple of trading days, and we struggled there earlier in June. And overall, what I'm seeing here is an ascending triangle. We're making higher lows. We have been over the past couple of months, ever since November, but we're struggling to break yet again 55.50. So I believe the second we take that level out, and I'm going to put my alert right at 55.50, once we break out of there, this stock could see a leg up to, you guessed it, that high point. I'm not sure why my alerts aren't working. What the heck, guys? This was happening in a video earlier this week. Mark is at or above. Create alert. I don't know what the heck's going on. But if 55.50 breaks, you guessed it, it's going to go up. In my opinion, that is, to that 3-year chart at about 58, or the 3-year chart high at about $58.30. That's the gap that's going to fill, which is about a 4 to 5% upside potential. And I do believe that is the all-time high on Cisco. Yup, it is. At about 58.26. That was back in 2019. So, yeah, I mean, Cisco could be going up. It could be gunning for those all-time highs as early as next week, especially if 55.50 breaks. So make sure you guys set your alerts. I would set mine, but I don't know what the heck is going on. Let me try again. Create my alert, 55.50, create. Oh, there we go. There it goes. Perfect. So I'm going to be watching Cisco next week. AbbVie is another one that I'm going to be watching. This went down 2% today. They just reported earnings of $3.11 of EPS versus $3.09 estimated. Revenue came in at $13.96 billion versus $13.63 billion estimated. So double beat revenue, beat EPS, and the stock is selling off a little bit. It went down 2% today. It's currently down about 3.2% from the recent high at about $119.90. And by the looks of it, if I extend this to the right, we're now looking to bounce off of the 180 SMA and the high points from all throughout May, June, into July a little bit as well. So don't be surprised if buyers step in here on AbbVie, whether it's at 115, 116, 17. Don't be surprised if buyers step in there and thus push this thing higher, maybe even to break out of that recent high from this week at $119.88. So I like AbbVie, ABBV. Procter Gamble also reported today, and they're breaking out like crazy. I haven't seen this stock do this well in a day, and that's kind of embarrassing considering it went up 2% today. I haven't seen it do this well in a day in such a long time. I can't even remember the last time. But they did EPS of $1.13 versus $1.09 estimated, so they beat EPS, and revenue came in at $18.95 billion versus $18.36 billion estimated, so they beat EPS, beat revenue, and the stock went up 2%, like I said. And and it's completely breaking out, guys. We're above the 139, 140 level of resistance stemming back from the end of March. We're above the double top resistance from earlier this month in July at about 141. And we also closed above it. We closed above 142. So by the looks of it, the next level, the next gap here, Procter Gamble has to fill, and God knows when it's going to do this. I mean, knowing Procter Gamble, it's not a high-flying stock by any means. It could take months for this to happen, but I'm watching it anyway. I'm going to be watching the move from 142 to 146, which was that high point from back in the middle of November, and I'm pretty sure 146 is the all-time high on this. I could be wrong. Nope, I'm right. You guys can see that on the 3-year chart. You can see 146 is an all-time high. So look for that window to close up to 146, 147. I believe that is very possible over the next coming weeks/months. We also had Exxon Mobil report today, ticker symbol XOM. The stock went down about 2.5% today. Not the best day overall, but then again, it wasn't the worst day either. I've seen worse for these oil stocks. EPS came in at $1.10 versus 97 cents estimated. Revenue came in at $67.74 billion. People forget how much money on the top line these oil stocks make. I mean, revenue for Amazon was about $113 billion. So Exxon's doing half of that. But then again, the valuation for Exxon is such a smaller amount than Amazon. I mean, you can't even compare the two, but I don't know why. It's kind of a off-the-cuff comparison here. Exxon Mobil's market cap is $243 billion, and Amazon's market cap is, what is it, 1.7 trillion. So you can't compare it. Obviously, it's different industries, but it's funny how Amazon has such a high valuation due to the industry it's in, and a company like Exxon makes about half the money Amazon does in a quarter on the top line, and it's valued so much less. But you got to ask yourself, right? Why is this? Because Amazon has a lot more growth potential, so that is baked in the valuation. Exxon, it doesn't have much growth potential, let's be honest here. But overall, they beat EPS, they beat revenue, great beat there. And the stock went down 2.5%. You guys can see it's trading pretty choppily over the past couple of weeks. We got down to about 54, got back to about 60. Now we're back to 57.50. But overall, it's obvious that we're maintaining an uptrend the past, 10 days, 10 calendar days, that is. Higher highs, higher lows, all that good stuff. We broke above the moving averages on the hourly chart, and now on the hourly chart, we closed above, not the 50, we closed under the 50 SMA, but we closed above the 180 SMA, so maybe we get some sort of bounce back here next week. I'm going to be watching crude oil as well, as that really is the underlying factor in terms of what direction Exxon's going to be going. It's pretty obvious at this point. Crude oil's been doing well, and thus the energy stocks have been doing well as well. So if crude oil rebounds, which I'm assuming didn't do well today, or actually, no, I'm wrong. Crude oil did pretty decent, but okay, if Exxon rebounds, crude oil has a great week next week, let's say it goes to 75, that should probably in turn push Exxon up as well. So yeah, that's a little bit of earnings volatility. We'll put it at that in terms of Exxon today. But overall, I think we could still get up to about 60, 65 on this in the short term. So I'm watching Exxon Mobil. Caterpillar is another one that sold off today, about 3%. They did EPS of $2.60 versus $2.38 estimated. Revenue came in at $12.9 billion versus $12.58 billion estimated. So they beat EPS, beat revenue, stock down 3%, and this one's looking pretty funky. I'm not going to lie. It's trading under both moving averages on the 4-hour. We're pretty much hanging on by a thread here at the support of this wedge. I'm telling you guys, if we break this support and we crack under 200, it's going to be ugly for Caterpillar. I feel like we'll take the lows out from earlier in July. We'll hit a lower low, and this could go 190, 185. It could definitely happen. And I'm probably not going to take this as a trade unless we break above the wedge and both moving averages, which is quite a ways away from where we are now. I mean, that's going to have to put it above 220, which is why I have my alert right now at $220 per share. So watch out for Caterpillar. If we break over 220, that should be a pretty decent spot, in my opinion, to potentially go long. And as always, I'm not a financial advisor. You guys must always do your own research. But that is my pretty much short breakdown there and what I'm thinking. And Google is one that might not be the best opportunity here, but listen, technically speaking, we pull back a bit. We're down about 4 or 5% from the all-time high here at 28.20. We're now at 2,700. So we're down about $120 per share. And technically speaking, over the past let's see here. Over the past 2 months almost, we've held the 50 moving average on the 4-hour chart like clockwork. Every time it's pulled back, buyers have stepped in and made this thing rally higher. So I want to see, is that going to happen again? Are buyers going to step in at 2,700 and push this thing back to all-time highs? Very possible, very possible. And people out there with smaller accounts, they may be looking at me like, Stas, what am I going to do with Google? I'm going to buy one share and make $80. I mean, it's not worth it. At the end of the day, I think that's worth it. You know, you got to go step by step, especially if you have a smaller account. You know, this might, and again, it's whatever. If you guys don't think it's worth it, go find something else. But for me, when I was starting out, I took a lot of higher risk plays, which made me lose a lot of money. I took a lot of penny stock plays when I had a couple $1,000 in my account, and I wish I would have played it not safer. I mean, yeah, I wish I did play it safer, but then again, nothing is really safe in the markets. Everything has risk in it, but there's obviously some strategies or some plays that have more risk than others. But I wish I could have looked back and told myself, hey, Stas, man, get out of those inverse ETFs all the time. Stop betting the farm on the ETF. Stop betting the farm on the penny stock pot stocks that aren't going to do anything. Maybe trade some large caps, and even though they're higher price stocks, you're gonna build the house brick by brick. It might take a bit slower, but it's better overall long term. So my advice to you is, if you have a smaller account, right? You're looking at Google and you're like, it's not going to make me much. It's going to take too long. I feel like you're missing out a little bit. Or even if you could buy half a share, I mean, you can still make a decent amount on the trade. And if it goes according to plan, that is, if it bounces off the 50 and goes back up to the highs here. And let's say you have more money. Let's say you have a $20,000 account and you want to buy 3, 4, 5 shares of Google. Obviously, there's more money to be made there. And there's levels to this. Obviously, there's levels to this. And that's another thing I wish I knew years ago when I started, because I would have had way more money now. But listen, like you go to college and you pay a tuition. Well, most people do. Some people go for free. I don't know. But as you pay a tuition, 10, 20, 50, whatever it is, $1,000 to go to college, I consider losses in the stock market as tuition, to learn how the market works, if that makes any sense. And let me tell you guys, I've paid a nice college tuition in the stock market, and I wish I knew just to play it safer when I was, more of a rookie trader. But that's just a little side tangent, and who knows, if we break the 50, we might fill the gap down to about the 180 SMA, which held back in May as well. back in March, back in the beginning of the year in January, February, which could be an even better opportunity because even more margin of profit would be open. That means Google would be down about 8, 9, 10% from the all-time highs. So what are your thoughts on that? What are your thoughts on that? Let me know down below in the comments as always. And the last stock for today is Johnson & Johnson. Excuse me, guys. Johnson & Johnson, which you guys can see this filled the gap. And we called this out a couple weeks ago. If you guys remember, we were talking about J&J at about 165 as it was holding the uptrend, the overall support of the ascending triangle here. We called it out there, and it filled the gap all the way to 172, right? 172 being that high from the middle towards the end of May, also from the end of January. And now this is another big test. Is the ascending triangle going to play out? If we break out of 172, boom. The ascending triangle will play out. My throat's freaking scratchy right now, guys. But yeah, I think it's going to play out. It's probably going to take some time. But overall, look, 175 breaks, boom, we're at all-time highs, or even 173, that is the all-time high. 173 breaks, we're probably going to go 175, 180 over time, and this is going to get to all-time highs as that pattern plays out. So, Jesus, guys, let me take a sip of my coffee real quick. Yeah, overall, that's pretty much it. I'm choking to death. I probably should end the video here. If you all enjoyed it, hit the like button. Make sure to subscribe, drop a comment, and make sure to sign up for my Patreon if you guys want to. It's linked down below. It supports the channel. You get a bunch of exclusive content, all my real-time updates, alerts, morning updates. It's great. Check out the Patreon. That's down below. And you guys should get $50 from M1 Finance. It's literally free money. Out of all the brokerages out there doing these promos, this is the best promo. Get your hands on an M1 Finance account. Link down below. Deposit $100. We each get $50. That's 50% ROI on your 100. It's free money. Check it out down below. I'll catch you all in the next video. Thanks for watching again. As always, keep crushing the market. Stay safe out there, guys. Have a great weekend. Peace out.